Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, another great big up day yesterday. So what have we looked at? In 4 sessions off of the 1640, we have 3 very large range days, very big green candles. The only reason that's happening, this is a complete front run of a deal. Nobody wants to get left out on what some people perceive is going to be a gigantic rally associated with this deal. All the right people or all the wrong people were coming out yesterday starting to talk about things like 1750, 1780, and I mean without a break, without a pullback. We even had one gentleman on CNBC start spouting off about S&P 2000. So whether it comes to pass or not is one thing. And if it does, we'll trade it and make money. But, when you get that kind of hyperbole, it's indicative of a bus that is very, very full on one side or the other. It's no different than when these guys come out and start talking about the end of the world when we're down on 1553.25 in June. It's the same thing. So you can let that kind of rhetoric affect you 2 ways. You can let it get in your head, and if you do, it will keep you from missing turns consistently in the market. I cannot tell you how many people were looking for 1550, 1580 while we were printing the 1726, 1727 area. A lot of people. So you have to ask yourself, you have to look at things in context. Where have we come from, and where are we going? We have now done 70 handles in 4 sessions off of that 1640 fib that we got out on Twitter, all in anticipation of a deal on the shutdown. Now, what is more likely than not? That we go up another 70 handles from here without a break? Or that a deal is priced in somewhere around here? Because remember, we were going down from 1726 before all this happened. Or, are we going to do a little bit of a retracement, maybe retest the middle Bollinger Band down there at 1687, kind of get our legs under us, figure out, what's support and what isn't. You've got a low, you got the 73 lows there. What's more likely? That we go up another 70 handles, or that we do some kind of a retracement? So what I'm doing right now is I have a core short that I've been adding to. Every one of these pops up into the 1705 to 1710 area. I add it and then I take it off. Like we just dipped down into just below 1701. I just took it off. So you can have a core short. My core short's very small, and you can do some bigger adds that you can trade around in order to take advantage of the volatility in the market. So you're making money while you're waiting to make money, essentially. So that's my suggestion. Don't get too heavy. You have to use stops. They could come out with a grand bargain that could pop the market a number of handles. Or the GOP could go into conference this morning and come out and say, you know what? We're not going to do it. Can't do it. Don't have the votes. It's not coming to the floor. If that happens, we're going to head back down. I think that scenario is also very unlikely. So we're going to get a deal. It's going to be a kick the can, and then we'll have to see how the market reacts to that. But after 70 straight up on a deal that doesn't really get anything done, you have to wonder, is there going to be some profit taking? Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. Come trade around this stuff with us. See if it works for you. 2-week free trial. Come on in. We'd love to have you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.